So the first thing that, you must always pay attention to is, something that I stress on a day-to-day basis is SMT, right? Wherever the market turns, there is always SMT, right? Before a expansion move, you can't show me, a price leg that expands without SMT. It's just not there. There will always be SMT divergence, right? So right here, even at the top right here, some of you right now, you're probably looking at this and being like, but there was an SMT here. No SMT was present here, right? You're probably saying the price don't go above this high here. Same thing here and the same thing here, which is incorrect. So right now, if I remove the wicks, you'll be able to see SMT right here, right? You'll see price closed above this high. Remember that the closes are more important than, wicks just running above. It's better to be focused on the closes than just focus on wicks alone, right? Because remember, wicks are just gaps. And most of the time, wicks are just manipulation, right? So right here, I just remove these two so you guys can see. Right, so the purpose of backtesting is just going back, looking at old data and trying to figure out what is the reasoning behind the reversal of price, right? What is the similar characteristic, right, of price that's usually present whenever it reverses? And, you need to do this because by doing this, you will be teaching yourself, right? And the charts will be teaching you as well. So most of the knowledge or most of the information that you will pick up in regard to the markets, the aha moments that you will have, you'll get them by going through old data and backtesting, which is, what we're doing right now. This is backtesting. Backtesting is not using the replay button. No, this is backtesting. You want to see this working, in hindsight, right? And then you trust it enough after doing it enough times, and then you'll be able to apply it to, real time as we've been doing, right, since we began. So right here, right, I took off the wicks off the charts. You can see right here, price failed to break above this high, right? Here, price broke above this high, closed above it, right? And here, price failed to break above this high as well. Right, and another important thing to realize is, right, the strongest SMTs occur between three asset classes that are closely related. So for example, right, if you were focused on, for example, the Forex market, you would have DXY right here, EU here and GU here, or whichever, order you would want to have them in. But you want to have at least three, right? If you're trading gold, you could have DXY, gold, and silver, right? And so on. And if you're trading, crypto, you like crypto, then you can use Bitcoin, Ethereum, and XRP, right? But, the best, market, in my opinion, that I'm the best with, whereas I can find something to do on a weekly basis, sometimes on a daily basis, is the futures market, right? It's more accurate and, it's just amazing. So right here, okay, I'll turn the wicks back on. And this is exactly what you want to be doing, right? Just going through your charts and looking for these things repeated. So right here we had price, right? We're focused on the closes, right? Ignoring the wicks, right? Focus on the closes. That's what's important. Don't make the wicks distract you. So right here we had price failing to close above this high. Same thing over here. And here we had price close above this high, right? This right here would not make me bearish. Why not? I would need to see a closer range SMT, right? Which, would occurred right here, which is why we had price falling this much, right? And as you guys can remember, I always said that the asset class which fails to break above the high before SMT is formed, or the asset class which forms a failure swing, for example, this one and this one, it will fall more than the one which broke above the high, right? And then after this, right, this large range SMT, which is what I call it, right? We had price trade into this fair value gap right here, right? And today, we are not like, trying to predict price or anything. We do that on Sundays, right? Sundays are when we do that. Right now, we're just backtesting. We're just looking at old data, showing you how I actually do it every day, right? So we had price trade into this fair value gap, fail to break above, the high of the New York session during the afternoon session, right? So this right here would be sequential SMT, right? So this again is another SMT right here, right? Then right here we had price fail to break above this high as well, right? Taken into this order block right here. And then here we had price trading above this high, right? While closing above it as well, right? So you need to see a large range SMT, right? For the small range SMT to be confirmed, right? Right here, this would be turtle soup, right? And, if this wasn't much of a move, right? But, it was a move, right? And then if we even go back here, right? Right here, there was SMT as well. Anytime you see price expand, there's SMT. SMT confirms everything. Right here, you can see it confirms this fair value gap. It confirms price running above this high. It confirmed this order block right here. This is what you need to be focused on, right? This will give you an edge, right? This is literally the magic behind most things, right? And I'll read a question right now. Then when would you choose to use a wick for SMT or body for SMT? Just focus on using bodies, right? Most times whenever the bodies are there, you'll see wicks, right? And then there will be hidden, SMT, whereas just like this one, right? Where you had price fail to close above this close, and then right here you had price close above this one, there was SMT. So like just focus on the bodies, right? And whenever you have price wick above, the previous high, break above a high and close above it as well, like this one, then you would turn to the asset class with which, which failed to go above the previous high, right? So whenever you see like price trades above a high, then you would look to trade on like a fair value gap with these asset classes, right? So I'll clean these charts up some more. So even tomorrow, we'll like be touching on how to, well, maybe not tomorrow, maybe like Wednesday, how to anticipate SMTs, right? It's pretty easy. Right, so we had price, failed to break above this high here. Right here, we had the same thing, right? But here, price broke above this one. Right? So this is what you should be spending your time doing, right? Because once you understand the concept of SMT, right, you need to understand this first, right? People usually do it backwards, right? They study FVGs or they study order blocks or they study turtle soup. But you're not going to know which one is fake, right? Which order block is fake, which fair value gap won't work unless you apply this, right? And right now we're talking about, high probability price reversals, right? Where you can just trade by just, trying to take every fair value gap, but you won't have a high hit rate, right? So you focus on this and then apply everything else, that we've talked about so far on this. Apply everything with this. Here as well, you can see. Remember, we talked about this prior. See, isn't it just, it's crazy that every time, we have an expansion, there's SMT there. So this is literally back testing, right? You go back, right? This is like intended to build your confidence in using concepts, right? You need to see it repeating over and over and over. And what's the best way to do that? By looking at old data, right? We've used these things with live data before, right? You know that. So right here we have SMT again. And you need at least 3 asset classes, right? And price will, whenever you have, 2 out of the 3 asset classes, which is why I say it's better to use 3. You can use 2, of course you can, but it's better to use 3 because whenever you have 2 out of the 3 asset classes failing to break below a low, like this right here, then we're prone to have more explosive price action, right? So for example, whenever you see this, right, price break below a low here, and we have failure swings here, then you would more than likely, want to be within these assets, to get a explosive move. And what's the first thing that you would do? You would wait for this to happen, right? You want to see price break above break above a order block, which would be this candle right here, or this candle right here, right? NQ is the cleanest, so let's just use NQ. So price failed to break below this low, there was SMT. Price traded above this candle, right? You can enter, anywhere within this candle and put your stop below this low, which is a swing low. So for example, this would be your stop, right? And this is how you backtest. And this candle right here is where your zone would be, where you would look to enter, right? So high probability order blocks, you'll find them after, price has a failure swing. And the only time a failure swing is confirmed will be when there is SMT, right? And you have two asset classes failing to break below a low, while the third one breaks below the low, which confirms the SMT, right? So on this candle, once you had price just break below this candle and, close above, this candle's open, you would turn to one of these to get an explosive price move. Whereas if you wanted to buy below this low, you could. Or even if you wanted to trade with this asset class, you could as well. So you could even buy below this low. You could buy when price traded in this candle, right? Putting your stop below this low right here. But your stop must be below a swing low, right? Which is what this candle would be, right? This low is lower than the one to the right and lower than the one to the left. Also, it closed a fair value gap entirely, right? So we wouldn't expect price to go below this low after, digging into this fair value gap and tapping into the open of this order block right here. Right? So also here we had price closing into this fair value gap. And then we had this fair value gap left open, right? And this is something else that, you'll glean. There are times when, you'll be waiting for price to close into a fair value gap. And then, you'll be waiting and then it just, runs, drops, fails to break below the low which you were waiting for because you wanted to buy here, right? And just continue to run. This is usually what happens, right? Right here, you can see price trade into this fair value gap right here while not closing these ones as well, which is a part of the SMT. Right? So whenever you have one asset class do this, close the fair value gap, create SMT while trading below a low, the other asset classes are not prone to get their fair value gaps closed. Right? And we'll go on. Okay, so even right here, let's do this. We had this price action right here. Why did I do this? Clean the charts. So right here, when we had this price action right here, you'll see this was last week's CPI release, right? Where is it? Right here. Okay, probably gotta use this so I don't get mixed up. So even right here, right? You guys will see SMT when CPI was released. So right here we had price fail to break above this high. This one did. And this one did as well. So we had price break above this high. We had price also close above this high as well, right? This was CPI, right? So this would be the Q1 of the New York session, and this would be Q2 of the New York session. So we had accumulation, manipulation, and distribution, right? So within this right here, we still had the hidden SMT divergence, right? Right here, which is usually present, right? So this is like just a filter, help you spot fake SMT, right? So right here we had price wick above here. Right here we had price wick above here, but we also had price close above this high, right? And close above this close as well. You can see right here, look, we had price failing to even wick above this high while closing below this low. This is SMT. It's not just the wicks, right? You got to be focused on the closes as well. And this was CPI last week, where we expected price to go down, right? So you want to be mostly focused, I'm going to say this again, on the bodies, right? So as you guys can see, even right here, right, before CPI was even released, was released on this candle, right? We had price close above this high. This was a sign. Price close above this high. And once we had price wick here, just you see what happened. And you will always find this, right? This will always be there whenever price reverses. Since we're already here, I think I should share something else as well. Okay, so this right now, since you guys have been here for so long now, I'm not used to talking this long. Yes, hidden SMT is fractal. Everything is fractal. So this is a way, to know when to expect SMT, right? So I'll take my fibs right now, right? And you need a range, right? Which price has broken down, through the 50% of the range and shift the market structure as well. So this is something new as well, which we will go deeper into. So right here, we need a swing low and a swing high, for a range to be confirmed, right? And this is right. The only reason why we would even look at these ranges right here is because of this one, right? So we have price form a range, then break below the 0.5%. Whereas here, right, price didn't break below the 50% of the range as yet. The same goes for the Dow, right? That was a mistake. The same goes for the Dow. Can you see this? You've never done this before, have you? Right? So by looking at this right here, this gives you more insight to price, right? And you can't just be looking at one asset class, to see this. So right here, by just looking at this, we can expect price to at least move here, right? So while we had price making this high, we could like be expecting to short here and take profits below this low, which would be below the 50% of this range that was formed. Right here, we had price shift market structure by breaking below this low right here, right? Breaking below this low, came back up into the fair value gap, created SMT, then it fell. Now, right, if we are expecting SMT to form, which one of these asset classes would you expect to run below the low? Which one would you expect to form? Which tool would you expect to form a failure swing, right? So just by looking at this, if price runs below this low, then we wouldn't be expecting this to run below this low, right? We would be at least expecting to run below this one, but probably just like tap into the wick or something. Then we would be probably continuing higher, right? On a short-term basis, right? But you should be gleaning from this. It's not just knowing what price is going to always be doing, right? You just want to be be able to find setups that you could pull at least 3 hours, right? 3 4, even two works, right? But you need high probability setups, right? You want to be on price action. You need to know more times than not what price is going to do, right? And things like this will help you, right? So right here, right, this low right here, you could say this is the drawn liquidity at the moment, right? And if price goes below this under SMT, which would be likely if price goes below here, then you could be looking to do something, right? If there is a lower range SMT after this, remember what we were talking about, right? And vice versa, right? You could do the same thing with your fibs, even with this high right here. So you could do this as well. Right? And you could be looking for which asset class is closer to the high and which one is not. So if we have price break above this high, then we could be doing the same thing with the fibs, right? So most times when I am telling you guys that I expect SMT to form, I'm usually doing this, but I don't use the fibs, right? I just use the fibs so you guys can see, or you guys can use it to practice, right? After a while, you will not have to look at fibs. You won't have to draw rectangles or anything like that. You just have your charts like this, right? So I just look at price. I realize this one is, it broke below the 50% of this range. It's closer to this low. This one hasn't broke below 50% of this range as yet, and the same goes for this. Also, what would incline price to fall more? The fact that there's SMT, and there's SMT. Why wouldn't you expect price to reverse as yet? Because there's no lower time frame there's no SMT here. You need SMT for price to reverse. You need SMT for price to break above this high, right? You need SMT for price to even go above this high. And even if price reverse, then you guys can see that this fell a lot more than these, which if you take if a swing low formed here, for example, and you took your fibs again and you did this with this low, right, and price did what we were just doing, failed, or failed failed to go to the 50% of this range, but here we had price above the 50% of its range, then we could expect SMT there. Right? It doesn't matter, which one you trade. The ones that, create failure swings will give you a much more explosive move, right? But you can even trade the turtle soup, right? It doesn't matter. Price broke, below here for NQ. It doesn't matter what happens, right? I usually trade NQ because I love NQ. Right? NQ is just the best for me. So yes. Now I'll just answer some of your questions. I'll spend like another 6 minutes answering questions. So if you're watching the recording, you don't want to hear me blabbing, going off about, things that, you probably don't care about, then now you can just stop watching. You can just turn it off. And I hope that you have a wonderful weekend. Could you explain a failure swing? Okay, we'll do that again. Okay, a failure swing. Again, this is it. So here, price failed to break above this high. This is a failure swing. Here, right, price also failed to break above this high. This is a failure swing. Here, price broke above this high, right? This was a stop hunt. This is not a failure swing. So price running above these highs right here, while this price failed to do so, right? You need to have at least, 3, even 2 would work, but 3 is better. Closely related asset classes, right? What do I mean by that? Dow, the S&P 500, and Nasdaq, they move in the same direction on a normal day, right? On a regular day, they should be doing the same exact thing. So whenever they're out of sync, that's a crack in correlation. So right here, we had price failing to break above this side. That right there is a failure swing. What confirms this? Whenever you have a closely related asset class doing the opposite or breaking above, its previous highs, that is a failure swing. Was that clear enough? Or do you need me to explain again or show you something else? So can you confirm an entry in a higher time frame FVG by, using what we were talking about today, right? By going through all charts, right? You want to be looking at where FVGs were respected. You more times than not see SMT there. After some time, right, in charts, like you guys can see my charts aren't like the most colorful, just doesn't make sense, to have to be marking every up close candle, every order block, every fair value gap, when you can just have a few lines in your chart. Good. Nice to hear that you finally understand. What are your opinions on TAPDA? Not sure what that is. On Forex pairs, for example, EU and GU, when SMT occurs on one of them, which one or how do you pick one? I explained that, Daniel. You can, if you rewatch, you'll expect you hear, me talking about that for sure. Most of, the things that you guys ask or asking, I explained right? And, you know, AMD, AMDX, and so on, it's usually, you know, it's usually put in place by SMT, right? So if you have SMT between Q1 and Q2, then more times than not, you're going to have AMD, right? And if you have SMT between Q2 and Q3, then you're going to more times than not have XAMD, right? You understand now? So the whole time, yes, SMT. It's very important, but you already know we have sequential SMT and we have more than that, right? And that's literally how you can get in sync with price action. Is this recorded? Yes, it is. The way how you backtest a 90-minute sequential SMT is the same with every cycle. The same with every single cycle. The same way how you trade SMT on a daily cycle with a daily cycle, or the same way how you use it is the same way you use it on a 90-minute cycle, right? It's fractal. That's why QT is there to show you the factuality between price action. All you need to do is backtest. Like if you don't understand, some things are you're beginning to understand, but it's not as clear as yet. All you need to do is backtest. You just need to backtest, which is basically what we were doing today. It's not hard. It's not hard to backtest, and that's exactly what will help you. Please explain about the synchronization of different time frames. Okay, so time frames to use if you're, you want to do position trades. You need the true month open, and the time frame that you use for entries would be the daily time frame. Swing trades, you need a true week open, the 1 hour time frame. Short-term trades, you need the true day open, which you need to be entering on the 15-minute time frame. Day trades, you need the 5-minute time frame, and you need the 90-minute cycles. For scalps, you need micro session cycles, right? And you would be using the 1-minute time frame. Do you use ranges? Yes. So yeah, and again, if you're day trading and you're using 90-minute cycles, you should be using the 5-minute time frame, right? Scalps, you like 1-minute time frame, then you should be using the micro sessions, right? For the highest probability trades to form, you must go through, you should follow seasonal tendency, check your monthly bias, check, the weekly profile that you expect, which, comes from you looking at the economic calendar the Sunday before, the trading week begins. Every cycle has a revolving true open, right? If you have, sequential SMT between Q3 and Q4, then the revolving true open would be between Q3 and Q4, which would be the beginning of Q4. Let me try to say it more clear, right? So your revolving true open, if you have sequential SMT between Q3 and Q4, would be the beginning, right? The opening price of Q4. And you layer that with SMT or you layer that with, you know, conducting your analysis with using the cycles true open, higher time frame true open. So, for example, if you're trading in the New York, right, you're trading New York and you're using the 90-minute cycles, right, and there's sequential SMT below, right, the 730 opening price, you buy below true opens, right? Yes, you do. You know that already. And there's sequential SMT below, then that would be high probability, right? And then, of course, you need like level, a higher time frame level for price to react to. Do you use ranges? Yes, everyone uses ranges. It's pretty simple, right? Buy sell liquidity, sell liquidity. And no problem, I will not cut anything out of this video, right? And if you guys, you realize, wherever we have the, silver bullets, that's usually, key time for sequential SMT, right? Which is pretty good. So like 10 to 10:30 is, where you would usually see the sequential SMT during the New York session between Q3 and Q4. If price is higher than the true session open and revolving open with SMT, is that high probability? Of course it is. So you need to, try to find which style of trading, works for you. If you're a position trader, right? If you're a swing trader, right? If you're a short-term trader, if you're a day trader or a scalper, and you need to choose one and just be true to it. Focus there. So if you like short-term trades, you'll be trying to capitulate on the daily cycle, right? And you'll be probably, making a better gain trading during London, the New York session, and the New York session, right? Whereas, day trades, you'll be using the 5-minute time frame, right? Which is, even though, you'll see me trading with the 15-second time frame, the 1-minute time frame, my favorite time frame is probably the 5-minute time frame, right? Because I have more time to think most of the times, which is the only reason why. And then I can use the 90-minute cycles to, its full potential. If Q1 and Q2 forms an SMT but after that there is another SMT between Q2 and Q3, how can I solve this? Then you just get out of the trade. You enter during Q2 if there's SMT between Q1 and Q2, and then during Q3 you could expect price to reverse. Typical price action, on a choppy day. probably go, probably until 9, maybe, if there's enough questions, which there seem to be. Can we split the day into 3 quarters, not 4? Well, no. Well, you can, but you'll be, making your own concept. You can. They explain 369. Not right now, my friend. All right. So the best thing, for me personally, which I'll probably be giving you guys the words for trading plans that I'll be sharing with you. I usually focus on the New York session, Q3, right? Then Q3 during Q3, which is 9 a.m. to 10:30 a.m. I always talk about. And if you guys ever listen, if you guys are ever trading during the New York session during this time and you see, right, a new week opening gap, right, overlaid with a FVG or balanced price range, and you have seekers on SMT, that is like, it's pretty rare, right? It doesn't happen. It happens, but not a lot. So you won't see that happening every single week. But whenever that happens, it's almost a sure shot, in my opinion, right? That's when I'll go, start recording my trade and post it, stuff like that, which it just doesn't fail a lot, right? Then you have, your microcycle, a microcycle kill zone, which is like 9:22 a.m. to 10:08 a.m., which is like a little 30-minute time window, which is like high probability, right? Where you see SMT on lower time frame for most of the times. And of course, you'll be like trying to enter within, within the range and exiting outside of the range, internal to external liquidity. Which kind of trades do you like? Do I like the most? I would say swing. It depends on the asset class, but I like I like scalps because I can just get in and get out within a couple minutes. And I like scalps because you can find more scalps due to the time that each candle takes to form, right? You always need one correlated asset to touch a new week opening gap in order to validate a weekly session, a weekly cycle SMT that is compared with a revolving true open. Not all the times, but if you just focus on that, then you'll be right more times than not, right? That's high probability right there. There are other things that you can look for, which we will eventually get into. Is bias important when it comes to sequential SMT? Sequential SMT creates bias, right? That is bias. They will, so we need also that events and black swan prediction. Don't worry about that, man. When we get to like probably more, we don't want to scare people, right? Used to, I used to be on that too much, but I just relax right now. Pretty sure that everyone, you know, heard too much of me over the past 3 years, and some stuff that I talk about kind of happening. So don't need to get into that. Not yet. With time, we will. So you know what I usually look for on Sundays. You already know. I go in Forex Factory, look at you know see what we could expect during the week when we would expect volatility. I'm not gonna go into this too much because we'll talk about this tomorrow. And then I'm looking at the new week opening gap, right? So whenever the new week opens, then I'm looking at new week opening gap between NQ, ES, and the Dow, comparing them, and so on. Which is usually, a major level of price, the new week opening gap. Best setups usually react to it. And whenever you have, say, you have price trading away from the new week opening gap, you know, d- even during a Wednesday or whatever, then you have news on Thursday, then you usually have price reverse if it's been trading away from that gap and return to it. I, you know, I've talked about so much, you know, things that you could just use by themselves, because most of you already know what the fair value gap is and so on, but you don't know how to validate it. SMT. Most of you like order blocks. You don't know which one to use. SMT will show you which one to use. Sequential SMT, not just SMT. Which SMTs don't work? The ones that are not sequential, right? Those are the ones that don't work. In my opinion, you guys will be far ahead. Like even, far ahead of me within the probably next couple of years, to be honest. Because you're just like, getting this information right now, information that I wanted. Right now, you have people just studying fair value gaps, not knowing that that's, you know, kindergarten stuff. Even regular SMT is kindergarten stuff because you don't know which one will work. How do you know? You're not going to know. You're just going to be blindly. You don't have a filter for SMT. Here we do. We know what happens with the asset class that makes a failure. So we know what to expect. We know which one will pump more, which one will drop more, and so on. We know which times to expect it. So I'll probably be here for like 2 more minutes. And yes, the questions will be left in the recording. So this recording will be around 50 minutes, 55 minutes long. So I'll probably just go now, and we'll be back tomorrow at 6 p.m. Eastern Standard Time. Everyone that, if you got a link sent to you, that this is just for people that pay with crypto, right? You'll be approved to join the new group. And, more than likely by Wednesday, right? Before we get into our weekly Wednesday lectures. And if you paid through WAP, then you're just gonna be emailed, and then you just join that link in the new group. Boom, and that's it. And this will be I promise you, the last time you really have to do this. Right? So yeah, that's it. Probably be doing this on most Saturdays. If you guys like it. So yeah, it's 9 p.m. now. Been here for an hour, and yeah, we'll talk again tomorrow. Have a wonderful night.